All right, guys, welcome. Thank you for joining in this college planning webinar. Today, you will learn how to combine college planning and financial planning into one. So I want to show you how to plan for college without going into debt and while protecting your family and future. So before we get started, I want to tell you just a little bit about me. My name is Gasper Michelle. I've been selling insurance for since 2009. And I did not attend college. And the reason I put that there is because I know this is a college planning seminar, is because my parents did not prepare me financially for college. Even though both of them were college graduates, my mom actually graduated college in Mexico and then had to come to the United States and graduate college again just to become a teacher. They really didn't emphasize college for me, especially the financial side of it. So when I graduated high school, and I went to community college like a lot of people did, but when it came to actually going to college, I remember at the time, first of all, I had a pretty good job. I made pretty good money. Second of all, I just bought this is in the early 2000s, guys. So I just bought a house. I just bought a brand new car. This is a brand new house, a brand new car. And I remember I went to my bank and I said, hey, because I knew it was time for university. I went to 2.5 years of community college, and I was like, what do I need to do about financial planning? And I remember she just went on her computer, typed a couple things in, and she's like, yeah, you're pre-approved for $15,000. I was like, what? I'm like, that's crazy. And I was like, okay, well, and I was like, all right, so how do I do that? And she's like, okay, well, you just have to bring in your college information. We can get that. And then she's like, I was like, okay, well, what if I just need less? And then she goes, well, it's $15,000 a semester. And I remember thinking, oh my gosh, $15,000 a semester. And all I could think of was if I were to go through with this, I would be in debt thousands and thousands of dollars, not including my house, which is a nearly $200,000 home, not including my car, which I think was like $30,000. I'm like, I'm going to be just completely buried in debt by the time I finished college. So I just remember like just walking out of there as fast as I could. I was like, this is not for me. Like, I'm not going into debt just to go to college. And like I said, I had a pretty good job, so I definitely didn't want to go into debt just for that. So, but anyway, let's get started with this program here. So what do I like about this program? It combines all these needs. It helps families pay for college. It helps colleges find students, but it also gives families financial security. So what this program is called SAGE Scholars, and SAGE stands for Savings and Growth for Education. It's the nation's first and largest college savings program. It was actually founded in 1995 by Dr. James Johnston, who was a former director of admission and financial aid at Wharton Graduate School at the University of Pennsylvania, and he did it to increase enrollment at his college, but he knew he could help other colleges too, since, like I said, he was in the financial aid department. He knew a little bit about that. So let me just tell you a little bit about the program. So there are currently nearly 400 member colleges, and depending on when you watch this, there could be more. They're currently adding about 2 new colleges a month. Overall, since the program started, there have been 530,000 students in all 50 states that have participated. Last year, there was 68,000 new students enrolled. So it's like I said, they're growing every year. But what the program has done is sent up over $380 million in tuition reward points in the last 13 years. So a lot of money going into these colleges, and a lot of students being helped. And last year there was $80 million submitted by Sage High School seniors in 2017. So we'll talk a little bit more about how that works later on. But just so you know, that averaged out to $14,000 in tuition rewards points, which represents 3,500 per year on average. So here's how the program works. So tuition rewards program, it represents a guaranteed minimum scholarship. So just think of like merit aid. I'm sure you guys have heard of this. And it's actually points, not dollars. So just consider it similar to frequent flyer miles. Now the discounts are actually provided by the colleges, and the college actually signs a contract to discount those to the students, and your points can be stacked with other forms of financial aids and scholarships. So it's not just a this or that, but you can actually combine them all together. So But here's what I need you to know, and I want you to watch out for. First of all, there's an 11th grade deadline. So what that means is if your student is already in 11th grade or beyond, this program is not for them. Now what that 11th grade deadline is they need to, what they'll do is they'll submit a student profile page, and what that allows the colleges to do is to recruit these students, saying that hey, they're interested in college, and as you guys know, college is just a business. Really what that does is it gives the colleges an opportunity to find better students. Second thing you need to watch out for, need to know is that college admission is not guaranteed. So just because your student applies for a college there, one of the member colleges, does not mean that they will be accepted. And third is that the free program has no cash benefit. So it's actually just a deduction towards their the cost of college, so it's not going to pay for rooming, it's not going to pay for food, other things like that, like other programs may have, other scholarships may have. So I just want to make that clear. So here is how you collect points. So first of all, just for attending this webinar, you'll get 500 points. Second of all, if you refer a friend or family member, they will you will also get 500 points, and also they will too. But every year when you do an annual policy review, you'll get an additional 500 points. Also, when you purchase a qualified product, you'll get 4,500 points, and each year the policy is in effect, you'll get an additional 2,000 points. On top of that, you'll get a bonus 3,000 points when your student creates a student profile. Remember, like I said earlier, this is an opportunity for colleges to recruit students that are interested in college. So what that does is it puts their information in a database, and the colleges can go out and recruit the best students available. So first of all, what is a qualified product? So I just want to tell you the financial products that are available are by these companies here, some of the top companies in the nation for financial services. So like I said, it's not like you're going to have to buy these are all top quality products, so it's not like you're going to have to buy from a discount provider. And also I want to make it clear that just because you're buying these products in the program, your rates are not going to be more expensive or anything like that. It's just an agreement that they have, and to be honest, I don't know how the program works, how the back end works, since they're legally not allowed to disclose that information. So I don't know if these companies donate to the colleges. I don't know how that works. They actually don't tell us how that works for legal reasons, obviously. So here are some of the products that do qualify. First of all is disability insurance. And I put a picture of that guy because a lot of times when people think about disability insurance, they think about workers' comp. And like I said earlier, I sold insurance for over 7 years, and that was the biggest thing I heard is, well, we have workers' comp, or I actually live in Texas where a lot of companies don't have workers' comp, and so that was always a big concern. But the thing is, most accidents and sicknesses definitely don't happen at work. So what that does is, with disability insurance on your own, it gives you 24/7 protection. And also, I just think that disability insurance should be the foundation of your financial protection. To be honest with you, I've filed hundreds of claims for different types of insurance, whether they're accident, different supplemental products primarily, but the number one policy that the policyholders were like, hey, where's my check, was on disability insurance. Just so you know, I mean, we all have bills, we all have things we need to pay for on a daily, weekly, monthly basis. Missing a couple of paychecks is definitely life-changing for a lot of people. So that's why I'm a huge fan of disability insurance. I think it's one of the first insurances you should purchase. So, but it also protects your most valuable asset, which is your ability to earn money. So, your ability to earn money is huge. I mean, it's definitely more than your car, your home. It's one of your most valuable assets. I think I said to me, it's just lifestyle insurance. If you're missing a paycheck, I definitely don't want you to miss out on opportunities to to travel, or if you normally eat out once a week, just because you're missing your paycheck doesn't mean that you have to ignore all the things that you used to love to do. So but it also allows you to focus on recovery. So if you are sick at home, you don't want to be worried about your bills. I know for myself, before I got into insurance, and the reason I got into insurance was because I was in a horrible car accident. And I was actually in the hospital for 5 days. And on the 7th day, I went back to work. Not because I felt better, not because I wasn't in pain, because I knew that if I missed more than half a paycheck, that I would not be able to pay my bills at the end of the month. So I'm a huge, huge fan of disability insurance. But also, too, is it provides a financial bridge. Now, what I mean by that is sometimes if you have other types of insurance, like for instance, I had a girl who she was in a horrible, horrible car accident, but it did happen while she was at work. So her workers' comp did kick in, but it took them nearly 6 months before they got her a check. So she was actually able to use her disability insurance or other forms of insurance to pay her bills while she was waiting for those 6 months. On top of that, I had another guy who sorry, I get a little more emotional on this one. He had a I can't think of the name right now, but basically he had a lung problem, and he when he filed his claim, he thought he was just going to be back to work in a couple weeks, maybe a couple months, but he ended up passing away a couple years later. But before all his other forms of insurance, like his I can't think of the name off the top of my head, but the one provided by the government when you're not able to work anymore. Social Security, I think, I don't know, it's escaping me right now. But basically, his disability insurance was able to be able to provide a financial bridge to help him, be able to live while he was waiting for his other forms of insurance to kick in. So that's another reason I'm just a huge fan of disability insurance. Another type of policy you could get would be term with living benefits. This is one of my favorite policies out right now. It's the new type of life insurance. It's basically the one you don't have to die to use it. And just so you know, there's no additional cost to buy. Just your policy has to have it. Not all carriers have term with living benefits, but the ones that do don't charge anything for it. What that does is it provides, it gives you access to your death benefit if you were to be diagnosed with a terminal illness. Now, a lot of policies already have something similar to that. What a lot of policies don't have is access to if you have a critical illness, so if you have like a heart attack, a stroke, things like that. Or if you're a chronic illness, so let's say you were to be in a car accident and you can't perform certain functions on your own and you need somebody to help you. That's what a chronic illness is. It could also be like if you're sick at home and you need somebody to check on you, that could be a chronic illness. So each company has different rules and guidelines for chronic illnesses. It just kind of depends on what happens. Other thing too, those benefits to you are tax-free, and I was talking about, that's what I mean by tax-free. Is so if you have, let's say you were to receive $100,000 in benefits, you will not be taxed on those $100,000. So it's really big, really important. The other thing too, guys, is it gives you cash to replace your income. Similar to what I was talking about with disability insurance, cash is king, guys, and most importantly, cash flow is king. If something happens to you medically, running out of cash is one of the worst things, and that's why the majority of bankruptcies, it's not people that don't have health insurance, but it's just people that run out of cash. So that's why I always recommend having some sort of cash backup system. It basically gives you cash to pay your bills. It also gives you cash to pay for experimental treatments. I had a buddy of mine who used his dad had a form of cancer where the leading expert in that form of cancer was actually out of Florida. So he was actually able to use that money to fly to Florida, get the experimental treatment, and just so you know, he's cancer free. It was a one and done procedure, never had to worry about it again. So, but his insurance wasn't going to pay for that, so he actually was able to use his cash to help pay for that. But the last one I had to that personally, I put bucket list. I know for myself, if I were to be diagnosed with a terminal illness, I would just start going crazy. I would do all the fun stuff I've always wanted to do. It's kind of like that country song, live like you're dying. And one of the things I forgot to mention with the no additional cost is I actually, as I mentioned earlier, I sold supplemental benefits for 7 years, so I had every form of supplemental benefits. I was actually able to cancel most of those policies and wrap them into a term with living benefits policy, and it was $80 a month. So I went from spending nearly $400 a month in supplemental insurance to $80 a month. So it's very, very affordable, guys. I highly recommend buying a term with living benefits policy for whatever amount you need insured. I think that was for when I got it, it was for $250,000, or I think it was a lot more than that. I think it was $500,000. I think actually what it was. I don't remember exactly. But since then, I've also increased my amount. So definitely, you can also do that too later on with yourself. If you want to start with something small, then grow, you can always do that. But next policy I want to talk about is the Index Universal Life, guys. This policy is awesome. It's another one I highly recommend. I call it the Swiss Army cash knife. It doesn't really make sense now that I read it out loud, but it just has so many different features. It's very flexible, very versatile. For instance, like I said on myself, I bought a smaller policy, and what I do is I fund an extra amount that goes towards my cash value. If you know what I'm talking about, great. If you don't, schedule an appointment with me and we'll kind of go over that. But what it does is it allows you to accumulate cash. Now that cash grows on a monthly, yearly basis based on different things. Like I said, it's an Index Universal Life. So what index means is it's indexed by certain funds. We won't go into all that here. Like I said, if you have any questions about that, just schedule an appointment. We can talk to you about that. But what it does is it allows you to fund your tax-free retirement. If you know what that is, great. If not, then like I said, we can also talk about that. Another thing is a $1 Million Baby program. What that basically is, it's putting a life policy on your baby to set them up financially for the future. And just so you know, you can put up insurance on your baby for this program and just be able to finance it that way. And then also it allows you to get all reward and no risk. Now, I'm sure you've all heard the saying, high risk, high reward. Well, first of all, this is not a high risk program. There's actually no risk. Now, the rewards are a little bit less. They're usually range from 3 to 7%, but there is no risk involved. So yeah, it's not going to double every 2 years. It's not going to go from a $50 investment to a $100,000 asset overnight, but it does become an asset for you and your family. Another thing it allows you to do is do policy loans. So with those loans, you could do anything with them, and that's kind of what I meant by cash for anything. But also you could use the policy loans for college planning, saving for a business, buying a vacation home, buying a second home, buying your first home, whatever you want to do with it. And also too, guys, you can also do living benefits on your Index UIL. I generally don't recommend putting it on that, just because generally most people would get a smaller death benefit. For instance, a lot of people will get like a $100,000 IUL, and then if they have the living benefits, it's only going to be $100,000. Where if you were to put that same amount of money in a term with living benefits, it's obviously going to be a lot more money because term is a lot less expensive than the Index UIL. But like I said, if none of those words that I just said don't make sense, schedule an appointment with me. We'll discuss those things. But also, it provides lifetime insurance. Now, what's great about an Index Universal Life is you can actually overfund it. So if let's say you wanted to, let's say you're in your working years, you're going to be working for the next 5, 10, 25 years, you can overfund your account so that for the rest of your life you'll still have insurance. Now, like I said, you still do need to overfund it, and like I said, if you are using your Index Universal Life for retirement and all this other funds, you definitely want to keep it well funded, but there are so many more options that just aren't available in other forms of insurance. So next, we'll talk about annuities. If you don't know anything about annuities, it's basically guaranteed income. It gives you tax-deferred growth. Gives you a guaranteed payout. Now, I first learned about annuities when a buddy of mine, we were in high school together. He actually got shot in the neck by a police officer. Now, if any of my friends are watching this, they know who exactly I'm talking about. But instead of getting a cash lump sum amount from the police department, they actually, since he was 17, they actually put it into an annuity for him. And what that did is it gave him a huge payout when he turned 18, and it basically gives him $1,000 a week just to live. And then every 5 to 10 years, or I think it's every 5 years, he gets a big lump sum. So it's like $50,000 or $100,000, whatever. But what it did is it turned his, I want to say it was like a $2 million settlement, and it over doubled what he would get paid out if he were to just take the $1 million. And like I said, he was 17 at the time, so his lawyers and his mom were very adamant about, we cannot give you $2 million. Like, you will blow through all of it. But just how that works with the retirements is if you have obviously if you have a lump sum amount, whether it be through a buyout in your company, or if you sold your home, whatever, maybe you can use that and put it into an annuity. So what it does, it gives you asset protection, wealth accumulation, and like I said, there's no investment limits. Now, obviously, there's different companies have different limits, but I mean, we're talking about millions of dollars that you can put into an annuity that gives you guaranteed income based on when you want to start withdrawing that money. So right now you may be thinking, so what's the catch? So there's no catch. Like I said before, these are basically, we all know that colleges are a business. It gives them an opportunity just to recruit better students. So Sage helps its member colleges reach their enrollment levels, and it helps you reach your goals, whatever they may be. So what to do next? So first option you have is nothing. Hope your child has enough in scholarships, kind of like my parents did, which I had no scholarships, so I didn't go to college. Or you could just pay for it yourself. Why would you want to put your hard-earned money for college if you could get a discount for your students or for your kids? The other part of that too, the other option is to schedule a free consultation. Just put money on your side. This program is for kids that are from birth to 11th grade. It doesn't matter what grade they're in. If you want to start saving for college, you can do that now, and just put money on put time on your side. Like I said, each year the policy is in effect, you'll gain an additional $2,000 in reward points. But also too, there's no obligation to buy. So if we speak and you're like, nah, this really isn't for me, or nah, this isn't what I thought it was going to be, there's no obligation. You can still be in the program. You'll get your $500. Your 500 reward points, and like I said, if you refer anybody, they'll also get their 500 reward points. So thank you for watching this webinar. I hope you learned something. If you have any questions at all, you can definitely schedule an appointment with us. And if you're just watching this on YouTube, I'll provide a link to this page. But thanks for your time. All right, bye.